Hello, investors, traders, and everyone watching. I'm Ali Dailami, Chief Analyst of Alpho, and in this video, I'll demonstrate the beginning of the long and ferocious cola war between Coke and Pepsi, what makes each of them unique, and how the companies have been performing. So, let's begin with a brief history on how it all started. In 1886, John Stith Pemberton developed the original cola recipe, and 2 years later, the recipe was acquired by Asia Griggs Candler, who in 1896 founded the Coca-Cola Company. 2 years later, Caleb Bradham renamed his Brad's drink to Pepsi Cola and formed the Pepsi Cola Company in 1902, initiating the beginning of the cola wars still present to this day. Since then, both companies continued to introduce new advertising techniques, such as Coke's first celebrity endorsement in 1915, until market instability caused by the First World War forced Pepsi to declare bankruptcy in 1923. Pepsi has also declared bankruptcy in 1931, but has emerged out of its difficulties by selling bottles at 5 cents apiece. Talk about survivor skills! Over the following decades, Coke has emerged as the more popular soda, but in 1975, Pepsi began a marketing campaign called the Pepsi Challenge, a blind taste test which showed that more people preferred Pepsi over Coke. This marketing technique boosted the market share of Pepsi and reignited the cola wars. In response, Coca-Cola had a spin-off on its flagship drink. In 1982, it began using corn syrup instead of sugar to reduce cost of production. This allowed it to market the product as a sweeter drink, similar to that of Pepsi. In 1985, Coca-Cola announced that it shall change the secret formula for its soda. The new Coke has a sweeter taste similar to that Pepsi that consumers favored in blind taste tests. Now, enough about the history and on to the present. What are the advertising strategies used by Pepsi and Coca-Cola? Let's start with Pepsi. The American-based company brands itself heavily on patriotism and loyalty to the nation. You can also see this in Pepsi's logo, utilizing the symbolic red, white, and blue colors of the flag of USA. This is present throughout its advertising strategies, focused on sponsorships involving popular and loved celebrities, figures, and social media influencers. Since these people have a power to influence their followers, Pepsi takes advantage of this and collaborates with some of the world's most influential figures. This includes Lionel Messi, David Beckham, Michael Jackson, Madonna, Beyoncé, the list goes on. Pepsi also collaborates with organizations such as America's official basketball and football associations, the NBA and NFL. On the other hand, Coca-Cola has historically been doing things a little more differently. Instead of patriotism, it brands its drink with wholesomeness, family, and nostalgia. The idea of friendship, kindness, and love have become key targets which the Coke brand hits, simply promoting the audience to drink Coke and just have fun. This can be seen in Coke's loyalty programs. The Share a Coke campaign was first introduced in Australia in 2011, which changed the traditional design of their products to display the message Share a Coke with and have names printed on the bottle or can. This has been an instant success as it created a more personal relationships with their customers. Its emotional branding campaigns using simple messages such as open happiness and taste the feeling in a way for it to go viral, as it targets wide demographics of adults, young adults, and children. Such personalized products create loyal and long-lasting friendship through personal attachment between the consumer and the business. Coca-Cola also collaborates strategically with celebrities and popular figures, such as women's football star Alex Morgan and the legendary basketball figure LeBron James. But the beverage company focuses more on organization affiliation rather than individuals, which is the case for Pepsi, being an official sponsor for American Idol, America's Major League Soccer, Major League Baseball, and the Global Olympic Games. Now we'll check out the main products of each company. The Cola Wars is not just for cola, but the beverage kings compete in multiple products. For orange fizzy drinks, Pepsi has the flagship Mirinda competing with Coca-Cola's Fanta. Pepsi has 7 Up as its lemon lime drink, while Coca-Cola prides itself with Sprite. This also applies to iced tea, with Pepsi being the parent of the renowned Lipton brand, and Coca-Cola is part of the joint venture with Nestle for Nestea. The firms also compete in energy drinks, with Rockstar and Monster Energy for Pepsi and Coca-Cola respectively. As you can see, the competition is not strictly for just cola. Now, both companies' most successful products are their cola drinks, but competition is swayed both ways for other products. In terms of market capitalization, Coca-Cola has always been larger than PepsiCo, with a market value of $243 billion compared to Pepsi's $224 billion. Ranked the 41st largest company worldwide in market cap, with PepsiCo ranked the 50th. Now, globally speaking, Coca-Cola heads the brand valuation game, ranked 6th compared to 29th for Pepsi on Forbes' World's Most Valuable Brands in 2019. When looking at the sales revenue, however, Pepsi surpasses Coca-Cola despite its immense popularity. In the first quarter of 2021, Coca-Cola generated around $9 billion and over $10 billion in the second quarter, with net revenues growing 42%. Pepsi reported earnings close to $15 billion in the first quarter and $19.2 billion in the second quarter, topping analyst expectations as net sales soared 20.5%. Let's dive into some analysis on the two beverage pioneers, starting with Pepsi. Looking at the technicals of PepsiCo, the company exhibits solid and consistent growth over the past year, with both short and long-term trends looking positive. The stock is currently trading near its 52-week high, which is a great sign, between the support zone ranging from $153 to $158. Looking at its fundamentals, Pepsi is quite profitable, with a return on assets of 8.73%, outperforming 80% of industry peers, and an impressive return on equity of 50.91%, outperforming the whole industry. However, the company is considered overvalued as it is trading 14.14 times its book value. Despite that, the company has enjoyed strong growth over the past 5 years, with its revenues growing by 2.22% on average per year, growing 11.8% the past year. PepsiCo is also financially healthy, with an Altman Z-score of 3.88, indicating that it's at little risk of bankruptcy. On the dividend side, Pepsi pays a dividend yield of 1.37, which is more than 72% of industry peers. Its earnings are growing more than its dividend, which makes dividend growth sustainable. For Coca-Cola, short and long-term trends also seem positive, with its stock trading in the upper part of its 1-year range, between a support zone ranging from $52 to $56 and a resistance zone ranging from $56 to $57. Compared to the stock of Pepsi, it can be seen that Coca-Cola stock is slightly more volatile, which can be viewed as both attractive and risky depending on your risk appetite. Moving on to fundamentals, Coca-Cola is highly profitable with a return on assets of 9.73%, outperforming 83% of competition, and a return of equity of 36.52%, which is significantly better than the industry average of 12.2%. Just like Pepsi, Coca-Cola stock is also considered Coca-Cola stock is also considered overvalued as it is trading at 5.51 times its book value, which is better than the figure of Pepsi. However, Pepsi leads the battle regarding growth, despite Coca-Cola revenue increasing 12.94% in the last year. Despite that, investors should not worry about the financial health of the company, with an Altman Z-score of 4.15 indicating very little threat of bankruptcy at the moment. Yet, Coca-Cola is seen more as a dividend stock with a dividend yield of 2.01. Investors continue to invest in Coca-Cola for long-term growth and dividend payout, as the company has been consistently paying high dividend for its shareholders. Let's note down some recommendations. To begin with, the red and blue differ in stock attractiveness. Pepsi is seen as an attractive growth stock, both for their short and long-term trends. Coca-Cola is an attractive investment if you're looking for consistent dividend and long-term growth. You can also always explore other options in the large beverage industry, such as the Nestle and Mars giants, which also provide an array of successful products. Finally, keeping up to date with the latest market revelations and company updates will give you an upper hand when trading. Knowledge is power, as it allows you to be one step ahead of other market traders. This has been Ali Daylami, Chief Analyst of Alpho, and I hope you enjoyed the video. Will Coca-Cola remain victorious in the Cola Wars? Or will Pepsi overtake Coca-Cola with its accelerating growth? Thank you all for watching, and I'll see you in the next one.